Hi everyone, today we're going to discuss chapter 20, manufacturing account. Manufacturing account, we consists of manufacturing account, IS in manufacture business, and also SOP in manufacture business. In this topic, we are going to discuss the introduction, what is the manufacturing account, and the elements of the cost, manufacturing account, how to prepare and how to record, and later transfer the cost of production from the manufacturing account into the income statement. And once you've done the income statement, which consists of the cost of production amount, then you transfer to the statement of financial position, the SOFP. And SOFP, they have difference from the other sole proprietor SOFP, as in the inventory current account. Under current account, the closing inventory will separate into three parts. Finished goods inventory, work in progress, and raw material inventory. Alright, what is the manufacturing account? Manufacturing account basically only prepare when your business is manufacturing business, is which they buy the raw material and then they make over and convert into the finished goods. Once the finished goods ready, then they will make a sales. So once you've done your sales, you can prepare your income statement. But before you go into the finished goods, you are in the process of calculating all the raw material, direct cost, direct material, indirect, and factory overhead costs, and all this you have to prepare in manufacturing account. So manufacturing account also same as the other account, they are based on the double entry records like others retail business. So the business will also prepare a manufacturing account, as I said just now, in order to calculate the cost, the total cost incurred when they are during their manufacturing process. So that produce the goods and how much cost they need to use on the raw material. So once they're done, then they will total up all the costs involved in the manufacturing business. And at the end of the day, the total of the cost, which is included with prime cost, factory overhead cost, and the adjustment of the WIP, work in progress, and you will get the cost of production. Cost of production means that the total cost incurred in their manufacturing process. Manufacturing account is part of the annual financial statement. So you must have this, then continue with the IS and SOP as your sole trader. So the cost of production will later transfer to the income statement, which is under the trading session, the cost of sales. Add together with your opening inventory and the purchases. So to calculate the profit or the loss for the year. This topic we will focusing on how to prepare your manufacturing account and later transfer the total cost that you derive from the manufacturing account into the income statement. So once you're done, then you will find out the profit for the year or the loss for the year and transfer to the final financial statement, which is SOFP, statement of financial position. There's some of the notes that you need to take care here is what is the work in progress, what is raw material and finished goods. All this I will explain in the next slide. Did you see the inventory here? Inventory that I recorded in SOFP, it will categorize in three different type of the inventory. Before we go into the manufacturing account, first we need to understand what are the elements of cost. So what are the costs, the different type of costs that are involved in the manufacturing process. So the cost of the manufacture is made up by four main elements. So the first one is direct material, direct labor, direct expenses, and the last one, factory overheads. So now we go to the details on what is the direct material. So direct material is the directly involved with the raw material that you need in order to make up the products, such as if you are like manufacturer for bread, so baker will need a flour. And if you are the the furniture manufacturing business, then you need wood in order to make up the furniture, the bed, the chair, and the table. And also, if you are the car maker business, then you need a steel as your raw material. Raw material is the initial essential the material that you need in order to make the things become a finished goods. Okay, second one, direct labor, or we call it direct wages. So cost of the wages that the people who are employed in the factory making the goods. So means that you can't simply find a replacement for these people who can have their expertise or very important to make the process or to make the products become a finished good, such as baker for the bakery shop. Carpenters is a direct laborers for the furniture maker. And this cost we refer as a direct wages or direct labor. And the third one is direct expenses. The expenses which a manufacturer can directly link with the product being manufacturing. So such as royalty. What is royalty? Royalty is the person who originally invented this product. So they might have their own logo, they might have their own name. So you need to register under your, this is solely for your own use. So other people cannot use your name. Like let's say a Massimo company, my friend cannot use Massimo as their bakery shop name as another names for for the shop. So they only can use a new names for their shop, so they cannot copy my names. Or fees that they pay to hire a special piece of the equipment to complete the manufacturing process. All these are direct expenses. So last one, factory overheads, refer as the indirect. So the keyword is indirect factory expenses. What are the things that it indirectly means? That you can simply replace, such as supervisor. Can you simply hire a person who replace your supervisor job scope? Can, because we don't need their special expertise like carpenter for the furniture maker. But supervisor is the person who check your work done and all this. So factory cleaners, so cleaners, everyone can become a cleaners, and the depreciation of the factory machinery. Okay, so all this is the factory overhead indirectly